Hey everyone, welcome back to Corporate Decoder, the place where we crack open the financial world and expose the secrets camel. In this filing, we're diving deep into a company that's trying to merge two very different worlds, biopharma and crypto mining. Here's the hook. Coeptis Therapeutics is planning a massive shakeup, merging with a crypto mining company, Z Squared, and spinning off some of its own biopharma business. It's a bold move, and we're going to decode exactly what it means for everyone involved. First up, let's talk about this company, Coeptis Therapeutics Holdings Inc. They're in the biopharma game, developing cell therapies for cancer and other diseases, but they also have a tech side focusing on an AI platform for marketing. Now they're merging with Z Squared Inc., a company that wants to build massive crypto mining farms, especially for Dogecoin and Litecoin. This is wild because these two businesses seem completely unrelated, so why merge then? This filing is a big deal because it lays out the plan, the risks and the numbers behind this ambitious undertaking. This is an amendment to a registration statement, meaning they're updating an earlier filing. This specific document is an S4 filing which is used for mergers and acquisitions. It's like the official playbook for this whole deal. They want to merge Coeptis with Z Squared Inc. Coeptis will buy Z Squared by issuing a lot of its own stock. After the merger, Coeptis will actually be renamed Z Squared Inc. That's a big indicator of who's driving the bus here and what the future focus is. This is the part that requires shareholder approval. Coeptis' shareholders are being asked to vote on several key proposals. What are they voting on? Well, first up is approving the merger itself and all the transactions that come with it. They also need to approve spinning out some of Coeptis' biopharmaceutical operations. This is super interesting because it means Coeptis wants to focus on the Z Squared side of the business, the crypto mining part, and spin off its original biopharma operations into a separate company. This spin-off is called the spin-out proposal. Then they want to change the company name from Coeptis Therapeutics Holdings Inc. to Z Squared Inc. That's a huge clue about the future direction. They're also asking shareholders to approve a new equity incentive plan for the combined company and vote on the new board of directors, Therapeutics Holdings Inc. to Z Squared Inc. That's a huge clue about the future direction. They're also asking shareholders to approve a new equity incentive plan for both companies' boards are on board with this. They think it's a good idea. The Coeptis board is strongly recommending that its shareholders vote yes on these proposals, but as always with these things, there are risks. They specifically point out you should read the risk factors section. Smart move, we will definitely dig into that. The CEOs of both companies, David Mihalik for Coeptis and David Halabu for Z Squared, are signaling this is a big moment. Now for the juicy part, the financials, this section shows us what the combined company would have looked like if the merger had already happened. It's like a financial simulation, Sabti. Let's look at the balance sheet as of June 30, 2025. The total assets for the combined pro forma company are a massive $105 million. That sounds like a lot, but then you see liabilities are also huge at over $3.5 million. This shows a company taking on significant debt or obligations. For the 6 months ended June 30, 2025, they're reporting a loss from operations of over $17.5 million. And when you look at the previous year ending December 31, 2024, that loss was over $21 million. So they are losing money, but the loss seems to be decreasing, which is a small positive sign, but still substantial. This is a critical point. A company that loses this much money needs to either grow revenue fast or find more funding quickly. This is where things get really interesting and also a bit scary. The filing details a ton of risks. For starters, the merger itself is risky. They say they can't be sure if or when it will be completed. And if it doesn't happen, they might have to pay Z Squared $5 million. Big ouch. Also, the value of Z Squared and therefore the deal itself could change significantly between now and when the merger closes. And the fairness opinion they got won't reflect those changes. Coeptis themselves have some serious issues. They admit there is substantial doubt about our ability to continue as a going concern. That's a direct quote, and it means that auditor is worried they might not be able to stay in business. They have a history of losses and expect those to continue. This is a big red flag for any investor. And the crypto mining side isn't without its own problems. They warn about the extreme volatility of Dogecoin and Litecoin prices. If these crypto prices drop significantly, their whole operation could become unprofitable or even unviable. Plus, there's the constant worry about regulations changing in the crypto world, which could severely impact their business. They also mention dependence on a small number of mining equipment suppliers and the risk of technological obsolescence. Putting it all together, creating a combined company brings its own set of risks. They might not be able to meet Nasdaq's listing requirements, which could lead to their stock being delisted. That would be a disaster for liquidity and investor confidence. And remember that spin-off they mentioned, shareholders might not see a benefit from the merger, and spin-out, that matches the ownership dilution they'll experience. That means shareholders might not see a benefit from the merger, and spin-out, that matches the ownership dilution they'll experience. That means shareholders could end up with less value than they started with. Let's peek at Coeptis' own financials before the merger. For the 6 months ended June 30, 2025, they reported revenue of about $263,000, which is very small, but their net loss was a staggering $7.7 million. It's a huge loss on very little revenue. For all of 2024, they had no revenue and a net loss of $10.8 million. It's clear Coeptis was struggling financially. Now, Z-Squared's financials are even more basic because they're a development stage company. For the 6 months ended June 30, 2025, they report zero revenue and zero operating loss. For all of 2024, they had no revenue and a negligible loss of $60. This tells us Z-Squared hasn't really done anything yet but plans to mine crypto. The real financial story for Z-Squared comes from the pro forma combined financials. Here's where we see the combined entity. Remember, this is a simulation. For the 6 months ended June 30, 2025, the pro forma combined net loss is almost $17 million. For the year ended December 31, 2024, the pro forma combined net loss is over $21 million. These numbers are staggering and highlight the major financial challenge ahead. The pro forma balance sheet shows a massive $63 million in goodwill. This often means they paid a lot for the acquisition, possibly more than the identifiable assets were worth. It's basically an accounting entry for the premium paid over the fair value of net assets. Let's briefly touch on the merger details. The core idea is Z-Squared shareholders will get a majority of the combined company's stock, around 90%, if Z-Squared's assets are valued high enough. This is why they've renamed Coeptis to Z-Squared Inc. The Z-Squared team is clearly taking the lead. The deal values Z-Squared team's mining assets at $660 million. This is a significant valuation, but it's based on projections and assumes high crypto prices. Remember that biopharma business Coeptis is spinning off? They're contributing most of their biopharma assets, other than one subsidiary called Therapeutics, to a new company called Spin-Out Sub. Then they'll distribute shares of this Spin-Out Sub to Coeptis shareholders. This is their way of saying, we're focusing on crypto mining now. Here are the old biopharma assets for you to manage separately. There's a little twist though, they're giving this spun out company an option to buy back Therapeutics later. This suggests they might still want some tie to the biopharma world, or a way to monetize it down the line. Scroll Coeptis business, pre-merger center star. Before the merger, Coeptis was really trying to develop cell therapies. They had a pipeline with potential treatments for cancer and other diseases. They also had this technology division with an AI platform, but the financial numbers showed these biopharma efforts were costing a lot and not generating much revenue. The spin-off makes sense if they believe the future is in crypto mining and they want to offload the costly biotech development. Z-Squared's plan is all about mining Dogecoin and Litecoin. They've got plans for multiple facilities and a fleet of ASIC miners. The key selling point is optimizing power strategy and fleet management. They emphasize a quick conversion of mined crypto to fiat to manage price volatility. This is a smart move in the crypto world, given how quickly prices can swing. Looking at Z-Squared's ownership before the merger, it's simple. David Halabu is the sole shareholder. But importantly, before the merger, they are issuing shares to BSG Series. CM is in some SEC litigation, so that's definitely a risk factor for Z-Squared. The new leadership team will be dominated by Z-Squared people. David Halabu will be the CEO, and Michelle Burke, the COO. Brian Cogley from Coeptis will be the CFO. The board will also have a majority of Z-Squared's nominees. This confirms Z-Squared is the driving force behind the combined company. So what's the verdict on Coeptis Therapeutics Holdings Inc. and this Z-Squared merger? They're making a huge bet by pivoting from struggling biopharma to the volatile world of crypto mining. The financial risks are absolutely massive. They're losing a lot of money and relying heavily on the hope that crypto mining will be profitable. The spin-off of the biopharma assets is a clear attempt to shed liabilities and focus resources on the new venture. The fact that Coeptis shareholders are being asked to approve a name change to Z-Squared Inc. and a board dominated by Z-Squared executives tells you everything you need to know about where the power and future focus lie. The biggest strength seems to be the Z-Squared team's stated operational expertise in mining and their plan to diversify beyond just Bitcoin. Their strategy of quick conversion of mined assets is also sensible for risk management. However, the biggest weakness is the inherent volatility and regulatory uncertainty of the cryptocurrency market itself. Plus, Z-Squared is still very much in the development stage with no real operations yet. It's a high-stakes gamble. The significant debt Coeptis is taking on alongside the massive losses makes this a very speculative investment. The success hinges entirely on the future value of Dogecoin and Litecoin and their ability to mine profitably at scale. We'll be watching this one closely. It's a fascinating case study in corporate strategy during a tough market. Alright, that's our deep dive into Coeptis and Z-Squared. What are your thoughts on this biopharma meets crypto mining merger? Let us know in the comments below. If you found this breakdown valuable, please hit that like button and subscribe for more corporate decoded content. And don't forget to join our Discord community linked in the description for more real-time discussions. Thanks for watching. See you next time.